A weaver dies in Florence, 1427. His widow receives money from strangers. No insurance company exists yet. Medieval Europe had no insurance. No actuaries, no underwriters. Yet workers face the same risk we do: illness, death, disability, loss of income. The solution wasn't invented by bankers. It emerged from the streets inside craft guilds, organizations of stonemasons, weavers, metalworkers, and bakers who controlled their trades. By the 1300s, guilds weren't just professional clubs. They functioned as mutual aid societies. A mason paid dues into a collective fund. If he broke his leg on a cathedral job, the guild paid his living expenses. If he died, the fund covered his funeral and supported his family. The mechanism was simple: shared risk, pooled money, and forcible obligation. This wasn't charity, it was contractual. Guild records from Venice, Bruges, and London show detailed bylaws spelling out who paid what, when claims were paid, and what excluded you, typically fraud or recklessness. Disputes went to guild courts, not civil ones. The system worked because membership meant your reputation and livelihood depended on collective trust. Insurance, as we know it, emerged from these guild models. When maritime trade exploded in the 1600s, ship owners faced catastrophic loss. They adapted the guild principle: merchants pooled money to cover shipwrecks. A formal contract, the first true insurance policy, was born. The structure was identical to what guilds had done for 3 centuries. But something shifted. Early modern insurance companies moved away from mutual aid. They became profit-seeking enterprises. The insurer collected premiums and kept what wasn't paid out in claims. The relationship transformed from "we share risk together" to "we manage your risk for a fee." The logic remained the same. The incentives diverged completely. Guilds themselves declined by the 1700s as nation-states centralized power and industrial production replaced craft control. But their invention, the pooled risk fund with enforceable rules, never disappeared. It became the template for modern insurance, health plans, pensions, and even cryptocurrency-based mutual aid networks today. Understanding that history matters. Insurance feels inevitable, impersonal, imposed by corporations. But it started as a deliberate choice by ordinary workers to protect each other. Knowing where a system comes from, its original logic, its original purpose, changes how you read the fine print today. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe, we decode the hidden mechanics of systems you use every week. This video is for educational and informational purposes only and is not financial advice. Always do your own research.